I'm pretty convinced that the way you become a profitable trader or you go from losing money to making money trading is by avoiding a few mistakes that most traders make. Today we'll talk about the biggest 3 mistakes in trading, things you should be avoiding, things that will make a big difference on your results if you avoid them, and we'll dive just right in. As a cool topic for today, it's going to be interesting to talk about these mistakes that traders make and how you can avoid them to get better results in your trading. First mistake in my list is not understanding the market context. Now, a lot of traders are trading setups that they hear about online, on YouTube, on different books perhaps, and they go in the market, trade these setups without thinking about which context they're trading it in. You've probably heard the saying of it's easy to make money when the stock market goes up. You just buy any kind of stock you prefer, doesn't matter, any kind of stock, and you make money with it because the market goes up all the time. What if you try to catch reversals in that market going up? You'll lose money for sure. What if you try to buy and hold long term when you are in a sideways market or when it's a downtrend? It doesn't make any sense. So understanding that market context, how's the volatility, how's the trend, will make a big difference on your results. I'll show you an example. Here's a good example on USDJPY, and I've said the same thing with the S&P, but this is a good one as well. We have price going in an uptrend. Now this is a 4-hour chart here. But if you go in the bigger time frame, like the daily chart, you'll see it's a clear uptrend. Price moving up and up and up, not moving down a lot. Now, what happens if I decide to trade what I trade usually, which is the bollinger band reversals? Now, I have some setups here on the chart, which are these red triangles for bearish setups and the green triangles for bullish setup. These are only engulfing candles, nothing special with them. I also have my engulfing candles set up with the bollinger band with these blue triangles here. You see all these setups in that trend produce a very small results. Most of them will be losing money, all right? Think about if you just go and you decide you want to sell here, all right? You stop that. So what if you want to sell here? Stop that as well. What if you want to sell here even? Okay, maybe a bounce trade, maybe 1-to-1, but still stop that. What if you want to sell here, right? Well, it's probably stop that, or maybe a small 1-to-1, and that's just not enough to make money. So all these examples, if you just look at the setup, my setup could be very good. This is a very good setup, by the way. I've been using it for multiple years. I teach it for free on YouTube. You can check out the video here, link in the corner. But what if you look at this in the wrong context? You look at this in an uptrend, you look for sell trades in an uptrend, it won't work very well. Now, what if you do the same thing? When you look for the setup with the trend, well, we don't have many of them, but we have a few of them. And here we get stopped out. Here we get stopped out as well. Here we also get stopped out. Here we maybe get a good trade. Here we kind of, maybe get a good trade. You see these setups are good for reversals. They work really well for reversals. We go from, like we go in a sideways market, we look for these extreme points, right? Here and here. If you look and trade in the middle, it won't work. If you look for even an uptrend and we trade against the trend, trade it short, it won't work because it's a reversal. It's not made for in a trend, it's made for maybe at the end of a trend, like somewhere around here, right? But here, all the way in between, that's not gonna work well. And same thing goes with if you look at this setup for a pullback, it won't work because we are trading pullbacks, we should trade reversals in a sideways market. So you need to know when it works out, and then you need to focus on just trading that kind of specific market. Now, the same thing will also go if you look at trading markets that are very volatile and have a lot of wicks. Here's a good example on JP and ZD, a pair that I don't necessarily like, but I have some good trades on it from time to time. I try to avoid these periods here when it's going sideways and very choppy, like chopping around big wicks like we have over here. This is just not good for good trading because we could even like buy here or we could actually sell there. A very nice setup here. Then we get stopped out just after by the wick, and that's no point, that's no use there, right? Or you look for a sell trade here, and then you get in a good direction here, but then price goes back in your favor again with this move, and you just get like stopped out at break even or something. That's not good for trading. That's just a way to get stopped out, get stopped out around all the time. And it's just not in the right context for the type of trade we're looking for in that case. Be aware of these times and try to filter out and only pick context where you're good at and where you actually have an edge. So that's the first thing, being able to understand the market context and only trading in times where you have a good edge and where you can actually make money. Okay, now the mistake number 2 is the one that you've heard everywhere online. It's been talked about so many times. People love to talk about it. It's so simple. It's kind of like a cliche, but it is adding to losing trades. And I'll add to this overtrading. So adding to losing trades is when you have a loss, price goes against you, then you add more to kind of average out or average into the trade. So you add more, you have a lower price, so then you have more chance to make money in the future. And then as price goes against you more, you add more to it, then you just have this big position where price goes against you and you have all your capital into that one trade. Bad way to do things because of course you can lose a lot of money that way. It's also not a good risk management technique at all. Now the other side to this is overtrading. So when you have a trade go against you or you have a trade stopped out, then you want to get back in to kind of overcome that trade. Like you want to be able to recover from that trade. So you have a loss, take another trade. You have a loss, take a bigger trade, maybe with even more capital on it. Then you lose more. Then you just like, it's just like a cycle of doom at that point. You would think that with all these people talking about these things online, with all the coaches or the people who talk about like overtrading and adding to losing trades, that people won't do it. But it's a human behavior to want to recover, want to get back on track, want to get back to break even. It's just part of human life. The losses feel worse than the wins. Therefore, we want to get back to wins or at least break even, not lose money. And that's why we add to trades that are losing. And that's why we also overtrade, because we want to have a revenge, we want to feel good. We are always taught to persevere, to work hard, to push through. And that in trading can be counterproductive, but people still do it because they want to get back, and it's human behavior. Now, the third biggest mistake people make in trading is following other people's signals and opinions. You gotta understand that when someone takes a trade, someone takes the opposite trade as well. You cannot just have one guy buying, there's gonna be someone selling. You're gonna have someone selling, there's gonna be someone buying to match it. So if you think that someone is buying and is right, then the one who's selling is probably also right, also wants to be right at the same time. So both people have their own opinions, have their own thoughts about something, and price could of course go either way. The guy who sold did his research, he knows what he's doing. So if you found someone who says that buying is the right decision now, then you could find someone that says selling is the right decision now as well. Both people have their own opinions and their own view of the market, and both of them could win money on this trade or lose money. It's a binary factor, they could win or they could lose. Does that mean that you have to have a good opinion to win in the market long term? No, because people who win long term follow a system, a strategy that they trade all the time, they stick to it, and that strategy is done over and over again. Now, on one particular trade, you cannot predict the outcome. Over a long number of trades, you can predict an edge from the data you get from the backtesting, from the data you have live in the market. You can predict some kind of edge you have. But on one trade or even 10 trades, it's really hard to do. The same way if you flip a coin, right, you go up, then the coin comes down, you have 50-50 chance, but that's only long term, right? If you flip a coin 10 times, it could be like 7 face or even 8 face out of 10. If you flip it 100 times, it's gonna be closer to 50 or maybe a little bit less, a bit more. But the more sample you have, the more data you have, the more instances of coin flip you have, then the closer you get to the right number, right? Which is in that case 50-50, or in trading it could be closer to like your win rate overall. But if you just have 10 of them or just have 5 of them, you cannot really predict the outcome. So listening to someone else's opinion is pointless. It's a way to lose money because you think that they're right. You'll be enticed to put more money in this trade because you trust their opinion, you trust that they'll do things right. That's why people lose money with signals. They only pick the signals that they want to take because they think, oh, this one looks good, this one doesn't look good, I'll take only this one. They put more money in the signals that they believe in, and these signals could fail and then they just lose their account. So the best way in trading will always be to have your own strategy, your own edge that you master and you work on and you kind of trust. And as you can do this long term, you can get good results, but you gotta kind of create your own edge, work on your system yourself, work on your process and make it work. Then you don't have to listen to other people's opinions, what they think, because everyone has an opinion and it could be right, could be wrong, but there's no way to tell and it's not really relevant to your own trading. So if you want to get tips like this on a daily basis, I publish these videos on YouTube 3 times a week, 2 videos in the week where I teach you stuff about trading, my own experience, and one interview every Sunday where I interview a trader around the world, something big you can learn from and get inspired by. So make sure you're subscribed if it's not done yet, and I'll catch you back here in the next video pretty soon. Ciao.